Alright, hi everybody. Today we're going to talk about Warren Buffett. Warren Buffett's investment portfolio and his very high exposure to one particular asset class. So without further ado, let's get started. Alright, hi everybody. So as you can see on screen right now, Berkshire Hathaway in its Q3 revealed that Warren Buffett has decided to once again increase Berkshire's cash holding, Berkshire's cash position, which has soared up to $325 billion, which was mainly a result of Warren Buffett continuing to trim his Apple investment. So this is what we can see on screen right now. You can basically see that once again, the Apple investment was trimmed by another 25%, but it's still the highest weighted equity position of Berkshire Hathaway of Warren Buffett with a weight of around 25-26%. And the other day I came across an interesting chart on my Twitter feed. I'm just going to show it to you right here. And what this chart shows is that Warren Buffett is basically sitting on more cash than ever, measured by the cash position size relative to Berkshire Hathaway's total assets. As you can see, we're pretty much approaching the 30% mark, a level that was never reached before. And what this chart also shows is prior to other market crashes, as the dot-com crash, but also the COVID crash, we're sitting on a relatively high amount of cash. And part of the same article, this was a Bloomberg article I think, was also this chart, which probably many of you are familiar with, basically shows the price to earnings, specifically the forward price to earnings ratio of the S&P 500 as a whole. And as you can see, at least measured against its average, but also against its mean, as I've shown in many of my other videos, we're certainly sitting at quite an elevated valuation level when it comes to the S&P 500. Here's another one that basically shows the same phenomenon over time. And basically you can see that, especially over the last 10 to 15 years, we have seen sort of a steady increase of the valuation multiple that the S&P 500 basket as a whole is trading at. And this has definitely contributed to the very fabulous returns S&P 500 investors were enjoying over that time period. The return of the S&P over that time period was not only driven by businesses growing their earnings, no, but also the S&P companies trading at higher multiples than they did in 2010 and basically right after the 2008 financial crisis. What I will say is that I came across quite an interesting data point when I was reading a bunch of different investor letters. This one here basically reveals that if you take out the Magnificent Seven, so the Apples, the Amazons, the Metas, the Microsofts, the Nvidia, who else am I missing? Tesla, and I'm not sure if I mentioned Google, so Alphabet. If you take them out, the S&P 500, or then you would talk about the SP 493, is actually not trading at such a high multiple. So let me just read that excerpt to you. So the Magnificent Seven group, Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla, has a market cap weight of 31.5% compared to the earnings and revenue weights of 19.4% and 10.8% respectively. The Magnificent Seven has an aggregate forward 4-quarter PE of 29.66 times, a 38% premium to the overall index, because when excluding the Magnificent Seven, the forward PE declines to 19 times. So only 19 times earnings, which is much closer to the historical average if we look at the previous chart again. But this doesn't change the fact that Buffett himself is definitely sitting on a ton of cash, more cash than ever in the history of Berkshire Hathaway. Again, measured against the total assets owned by Berkshire Hathaway. And I think this should definitely give investors pause. And it has definitely led to more and more discussions whether a market crash, a market decline, a significant decline is imminent, which I get. I get why this is another signal. However, what I will say is that I think it's just another signal. I've actually discussed in previous videos, and I'm just going to show you a screenshot from a recent blog post I published on my blog, that I see quite a lot of signals that we are probably closer to the market peaking than the market reaching a bottom. Obviously, we're not close to a bottom because the market is in an upward trend right now. But I think there are quite a lot of signals. And I would say the fact that Warren Buffett himself, the greatest investor of all time, is apparently deliberately sitting on more and more cash. So he has dry powder to to make new investments when the market eventually comes down. I think that is another signal to be aware of. And what I also want to bring up is a recent podcast episode that I listened to. It's an episode published by This Week in Intelligent Investing, and the guest here was Simon Colt. And one particular point they brought up stood out to me, and it was that the best investors of all time, what they excel at is pattern recognition. So they might not even have to put a ton of effort into the analysis work itself, because they are so good and so experienced that they can recognize patterns without putting in as much work as would be required from other investors. And Warren Buffett is certainly an investor that, due to his multi-decade experience, is really good at recognizing patterns. And I think he has actually quite a few times over the last few years articulated that he thinks the market as a whole is trading at elevated levels and that future returns are probably not going to be as good as they were in the past. And what I was concluding in a tweet, and I think that's very important to understand, is that of course this is another signal, but the signal itself doesn't tell you that the market is going to crash anytime soon. So let me just read my conclusion to you, because that will be more concise than when you just talk about it right now. So I wrote, while no single data point, including Buffett's cash position, guarantees a market downturn, it is a noteworthy piece of the puzzle for those who value Buffett's ability to see what others often miss. His current strategy could serve as a reminder to tread carefully, be cautious when everyone seems to be euphoric about the market price movements or the current price developments, focus on fundamentals, and perhaps keep some cash on the sidelines as well. What I will also say is that personally right now, and again, I have discussed this in a recent video, I haven't deliberately increased my cash position at the moment, because I've actually talked about this with Andrew. I've had him had a look at my portfolio and the current valuation of many of my holdings. And what I should say is that the portfolio itself has done fantastically so far this year. The businesses have developed very favorably, but on top of that, the valuation multiples the companies are trading at have also expanded. And I would say for the most part, especially my highest weighted positions, they're probably trading at fair multiples, maybe to the high end of what can be considered a high multiple. However, I do believe that these businesses are running on full steam right now. They are really developing very well, and I expect significant earnings growth going forward as well. So personally, I don't see any reason to sell these positions at the moment, despite the market as a whole maybe trading at quite high levels. Okay, here's another point I wanted to bring up. Why exactly is Buffett increasing his cash exposure? You could argue that it is due to him anticipating a market meltdown. The other line of explanation could be what Theo Birkan here highlighted, or at least maybe half of the explanation, that, I'm going to quote him here, that Buffett is trying to leave Craig a lot of cash because he probably thinks views odds as above average that a bear market is coming. So that's maybe not a new thought here, but I've heard this line of thought before, that Buffett is increasing his cash exposure to leave some more, I called it wiggle room, to the probably future CEO of Berkshire Hathaway, which is Greg Abel, because he might want to change the capital allocation strategy of Berkshire Hathaway. Maybe he will start paying a dividend. Maybe he will use, and this is what Buffett would do as well, of course, maybe he will use the cash, quote unquote, war chest to make opportunistic buybacks. And this is another tweet that stood out to me, and that I decided to include in this video from Bloomberg Intelligence, which sort of goes in a similar direction. So they write, Warren Buffett's Berkshire Hathaway is the real unicorn among US stocks, according to senior insurance analyst Matthew Palasola. Heir apparent CEO Greg Abel is a proven deal maker who will carry on Berkshire's ethos, investing in cash-generative businesses with wide moats and strong dividends. However, Abel may take a different view on capital management. Berkshire has never paid a dividend, as I just said. And what I wanted to bring up here too is the chart attached to that tweet. What you can see is basically the total return of Berkshire Hathaway ever since 2000. I guess that's on an annualized basis. And what stands out to me is that Apple particularly was a major contributor to the performance of Berkshire Hathaway, which should come as no surprise, because before Buffett started trimming Apple was at some point representing more than 50% of Berkshire's total equity portfolio. And I think at one point it was worth almost 200 billion US dollars. So I think you could make the case that Buffett may not necessarily be making a market call, but that he is in fact making what I refer to an Apple call. He just believes that Apple is not going to deliver satisfying returns going forward. I've actually discussed this in my last video, or it might be my second last video, in which I highlighted that Apple is trading at around 30 times earnings, maybe even a little higher by now, and is not growing its revenue significantly over the more recent quarters. And if we see the multiple come down, investors may end up with a poor return actually. Okay, I think I'm going to call it a day here. Let me know what you think of Buffett increasing his cash war chest, how you are positioning your portfolio right now for the events that may come in 2025. And I'll talk to you in some of my future videos. Take care.